Forex fortune hunters, good day to you wherever you are, from Australia to Bulgaria or right here in the good old USA. Today we're going to focus our attention on the euro and the USD, and we're going to take a look at multiple time frames using a variation of our multiple moving average template, Simply Spooky. I'll show you how it's constructed and where you want to take your trades. Right after this, hold on to your hat. We'll get started in a minute. Okay, fortune hunters, the purpose of creating this variation template, Simply Spooky, is to show you can develop your own models of this basic idea and make it more comfortable for your own personal trading style. Right now we're using a 1-hour chart of the euro and the USD, and we've had some really great trades over the last month. You can see here was Sunday night and a Friday trade. This was back on the 2nd of August going into the 5th of August, and we're recording this on Wednesday, the 7th of August. And notice that once we had the issue of the yuan, the Chinese currency, devalued over the weekend versus the USD, that's when we had the significant move in the euro versus the USD higher. And so great trades are coming out of this, and they all have a similar pattern, no matter what the fundamental announcement. If we have a reversal of the 12 and the 24, or the 8 and the 34, or the 10 and the 21, you pick your poison. Basically, you're going to get this medallion. And the medallion is going to also help us with the Zeelander signal line to print the signal line, this one right here, to remind us where this crossover occurred. And then once the moving averages move higher than the Zeelander signal line, that's when we get our white arrow. And that's the confirmation we're probably going to be going up. Especially when you're using a longer time frame chart. So as a result of this, now what we find is that we had a big burst to the north on Friday, then a pullback into the bands, and this is where you'd like to take your trade. Now down here, notice that we have the stochastic, and I've given it numbers 4, 3, 2. Those are our inputs. Notice that what happens here is that we have a pullback, and the stochastic falls back before going higher. Certainly, you don't want to be doing your buying up at the peaks. You want to wait for the pullback into the bands and also the stochastic decline. Now, down here, we have a special version of the MACD. Notice here, we've had a crossover to the north. There is some chop in this area, so you don't want to overcommit. You don't want to go too early. You want to wait for that nice pop higher. And then notice we've changed the color variation so that if the indicator is showing a slowing in momentum, we picture it with an orange or a tan kind of a candle on the histogram, versus white means up. And so now we come back in, we pull back into the bands on our weekend Sunday trade, and then we begin to move higher. And notice here is where the big stretch of upward momentum comes, and we can see by clicking on our crosshair tool and then measuring the pip count, we had a 94 pip move, 97, even up to 125 pips towards the end of that Monday, August 5th of 2019. So that's the way you want to take a look at this. Now notice that we have the similar kind of situation here to the downside, which was the week that Powell and the Fed and Draghi were all talking about their interest rate decisions, and it looked like the euro was going to fall because it at first blush, when Powell came out with his Fed announcement, it was very simply maybe one and done, and that was a big disappointment to the market. So as a result, the euro lost value compared to the USD at that point in time when everyone thought, Well, maybe the U.S. is going to hold to their guns and not lower interest rates too significantly for the balance of 2019. Same thing here. You don't even have to know about the fundamental announcement except to know that perhaps one is happening. We had a downward reversal of the 12 and the 24 EMA. Then we had a continuation down here into this area, and then the plunge lower on that Wednesday afternoon. This would be in the afternoon U.S. time, and you can see that's when this actually happened. Now, one other quick reminder for you that if you don't want to just rely on this 1 hour chart, especially during times of when you expect real volatility, you can draw your line. Now, what's happened here is we'll take our vertical line and we'll move it to the first candle after the red arrow. We would expect a little pullback after that happens. That's what typically takes place. We'll take a look at the 30-minute chart, and we'll come over here, and then we'll even go down to a 15-minute chart, and look what happened here. This was the situation on the 15-minute. Down we came, back to the bands, down we came, and then we came into this area where we had the 2 o'clock announcement, I bet. Let's see if that's the case. Yes, 1800 minus 4 is 1400 is 2 o'clock on the international calendar. And so this is 2 o'clock in New York, and that's when the Fed announcement occurred. Down we went, then back up, and then a continuation south. So notice that we had just as good a move on our trade here. We come down and there's a 62 pip move before a quick move back in here at the end of the day, then a continuation to the downward side. Now in this particular chart, I only added this blue vertical to show us when the London open is. This would be 3 a.m. East Coast US, which is approximately 7 to 8 to 8:30 in London, depending upon, daylight savings and all the rest of it. But the clock down here is based on that kind of time frame, and we're following 4 or 5 hours behind the London and the Frankfurt kinds of activity zone. So this is when it gets hot. Notice we don't have much activity at all in the EUR.USD during the Asian session this day. We get a beginning amount of time during London after London opens, and the trade is definitely to the downside. So for sure, you want to be very careful about taking any longs when you see this configuration here. Okay, now let's also just take a breather here and then come back and take a look at one other issue I wanted to point out to you. Okay. Basically, you want to also notice not only did you have this pullback into the bands, but it was also matched by our stochastic coming up above to be way overbought at this point in time. For sure, you're not going to want to get into a trade to the north here. And also notice in our MACD, we do have our green pullback bars here on the 15-minute chart prior to the Fed announcement, and then the dramatic drop down here. Is it okay to wait for your first bar? Yes, but basically you can also get into this trade in anticipation of it, and I think that's a little better way to do it. It gives you less risk for your potential reward because you can see up in this area what we would like to do, and we'll drag down here just a little bit. We'd like to put our stop loss line either at the Zeelander signal line or just slightly above it, and certainly wait for a close. It could conceivably in the volatility trade up here and then come back down. So you don't want to necessarily do it on an intra candle basis, but put your stop right up here, and then we can take a look and see from this level up on the 15-minute chart. It's going to be 15 to 18 pips up to that level, and certainly 15 to 18 pips of a stop loss would be a nice match for this 77 pip drop right here to the first level, back into the bands. And if you wait and see the continuation on the following day, on Thursday of last week, this would be a 96 pip trade in response for a 15 to 20 pip risk, which is certainly a nice ratio, 5 to 1. Okay, guys, I hope that helps. We'll come back with some more videos on Simply Spooky as we see this wonderful period of volatility because of trade wars and currency tension take hold of all the international markets. Please like our videos, subscribe to our channel. Shoot me an email over at fxfortunehunter.com if you'd like any of these indicators. And obviously, we have a zillion other indicator videos on YouTube that you can check out to see how you modify each one. If you have any questions, please comment, and I'll be happy to answer your question as best I can. Good trading to you. Now, let's get some pips.